All right, good evening, everybody. I'm going to be going over a brief video of my new indicator, the risk on, risk off toolkit. It would be this one right here. If you do want to follow me to get access to other indicators that I have made, you can find me on TradingView, Sam B817. That's my tag. I will also tag the description and the link to the video in this video. To the indicator in this video. So my apologies about that. So it's the risk on, risk off toolkit for NQ, RTY, YM, and VIX. This is what you'll be utilizing to add a little bit of advantage to your trading. Okay, it is basically a tool that shows you when NQ, RTY, and YM are in alignment and the VIX is diverging. So NQ, RTY, and YM will be all in longs and the VIX will be dropping. Okay, or either the NQ, RTY, and YM will be in shorts and the VIX will be rising. Now there are times where you will see where the VIX possibly may rise and one may be still running upwards. When you do see these type of scenarios happen, just understand that it is somewhat out of alignment, but one could be losing. Like today is Tuesday, November 11th, and NQ, a lot of people are leaving out of tech and moving over into the industrials. So YM ran even when tech was still dropping. All right, so you will see those type of scenarios. But let's get down to the indicator. So this morning, we will go back to right here at the 9:30 open. What you will see is, for the most part right here, everything was out of agreement. So normally my chart is this grayish color that you will see right here. When they all are in agreement, you'll see that the background highlights and it will turn green. You can change this color to a darker color if that's too light for you. When there's an agreement and they are going short, you will see the background change into red. Okay. When you see the candles highlighted in red with an arrow above it, that means that it is a strong candle and the body is at least 85% of the current candle, and you'll see it pushing down. So it will also show you right here in the dashboard that NQ is bearish, RTY is bearish, YM is bearish, and that the VIX is falling. Okay, so the dashboard is there to be able to assist you into having the visual, besides also having the background color change as well. Now, if you see that the background is green and you find that your candles have changed to green color with the green arrow underneath, that's just allowing you to know that you have strong bullish pressure pushing upwards. And sometimes you can use this as a scalp play, and sometimes you can utilize this as a directional move. Now you can utilize this. I currently have it on the 5-minute time frame, but this works on any time frame. I would suggest that on the lowest that you probably use it on the 5-minute, and you can go all the way up to the daily and find that it is confluence as far as the market all moving in the same direction. Okay. Now everything is not always going to be in perfect alignment, right? Like today we had YM, which is over here. We had YM that was pushing up strong with a strong bullish candle. And at that same time, that is on the 1025 candle. And if we go back to the same candle right here, we have RTY was bearish at that time. And then also, if we look over here, we have NQ that was bearish at this time. So these were our laggers for the day. Okay, we want to find these strong bullish candles, and typically if you wait and you use volume as a confirmation, the volume tool that I have down here is the SATY, I think that's how you pronounce his name, SATY volume indicator. I will also link that in there if you guys like this, because it does have the buyers and sellers currently coming in at that time. That if you wait, typically on a 5-minute chart, after about 1 minute is passed, sometimes 1 minute and 30 seconds, these candles will start to appear, right? And it will start pushing up strong, and that can be your entry. And as you're making your entry, I always use a bracket order. So when I'm making my orders On futures, I'm making a bracket order, and I'm also moving up my stop loss as it's coming somewhat into profit. So typically, depends on the ticker symbol that I'm using and the amount of contracts. I will move it up to at least about a break even level as I'm getting to profit, or maybe a $20 or $50 loss, worst case scenario, to give it a little bit of room to breathe. If it's moving up too quickly, then maybe I'll try to protect it with at least a $20, $25, and that way I'll at least get it to run a little bit. And if it's moving up pretty fast, then I'll move that up more into profit to secure profits as well. Also, I like to see when you do have these moves and a fair value gap is presented, and also possibly we may have price dip back into that fair value gap and then go ahead and continue back up as far as price being in alignment on all different tickers. That is a good advantage for you to be able to find strong body candles, fair value gaps, price dipping back down into those to continue on pushing. Like we had here at YM on the 1025 candle. After it displaced and left a fair value gap, price dipped back down. It did kind of consolidate for a while. So if you do see consolidation kind of happening, and then you want to wait until price is back into somewhat a bit of alignment, then that will be a good setup to take once everything is back in alignment on all different time frames. And that happened right here on the 11 o'clock candle. It did take a little bit before it started pushing back off, and then once it pushed off, of course, we have our retracement. And once it retraced a little bit, we do have getting back into alignment, and then it just kind of just took off for the rest of the day. YM ran, I want to say, almost about 400 points today. And Q kind of consolidated for quite some time early in the morning pre-market session, and then even after open, you can see right here kind of chopped around, trying to find its way. It was a couple fair value gaps. Did it dip down into on the 5-minute, the 15 and the 30-minute time frame before it finally got enough fuel to go ahead and take off. The market did just open for the evening session, so now you kind of see here where you see it's kind of flipping colors from bullish to bullish, bearish, and then the VIX is falling. Now keep in mind also that the VIX is only operating during, I want to say, I believe, the early morning hours of the market until the market closes. So when you are utilizing this indicator and you want to try to find confluence throughout the usage of this, if you are trading in the Asia session, just understand that wherever the VIX left off at, that's where it's going to be showing. And then just try to find confluence between all tickers moving in the same direction. Preferably if you see them with volume, then that just adds extra confirmation. Utilizing price action. This is a great tool to utilize with price action. Okay, so if you're looking for your price dipping into fair value gaps, and then you start seeing strong bullish candles start to displace, okay, then you see them drop back into more fair value gaps and start to take back off with more displacement and continue up. Those are where you're going to find your best setups. This does work great if you like to use the orb strategy as well, whether you use a 15-minute orb or a 30-minute orb. Me personally, I kind of like the 30-minute because the 30-minute kind of gives us a good direction afterwards. I do have an orb indicator that I created as well. Like I said, if you want to follow me, then you can find that also in scripts that I created. But main thing is you want to find that price is in alignment. So if you are seeing like candles like this where price was in alignment, it did have a wick, and then when price opened up, it was still in alignment. You can use it still like a strat play if you ever traded a strat, or you are a strat trader. You can just take it once it breaks this high, because it was still in confluence as far as the background being highlighted. It never changed up. So the continuation, you could have took this trade, let it run up a little bit on RTY, which it went from basically 24.56, and you might have got stopped out here at 24.59, which that was like a $3 move, or whether it ran up, and however you moved your stop, wherever it might have kicked you out at. If you kept it down here, once you entered, and you had your stop loss maybe $30, $40, $100 down, It would have probably came a little bit close and made you nervous there, but then you could have still took this move for the remainder of the day because it did continue to run up, chopped a little bit once it created a new high here at the New York high, pulled back down, and you could have possibly still closed out up here at 24.68 when your initial entry would have been, I think I said about 24.60 or 24.59, something like that. That was a pretty decent move. Now, if you would have caught YM with this trade earlier, and I'm just going to show you here. I'm going to close out the rest of my screens. Now I'll just show you what it did look like using the orb with this play for the 30-minute orb. So if you would have utilized the 30-minute orb, and if you do want to use my orb, it does also include liquidity sweeps as well. That's where you see these orange highlighted wicks and the orange highlighted sweep area. So as I was showing you, once this candle displaced, and then we also had a strong bullish candle that got created outside of the 30-minute orb, and price wicked back down. It not only wicked into that fair value gap, it also wicked into that to the 30-minute orb. So once it displaced and it wicked off of the orb and the fair value gap, then it pushed back up for the continuation of the remainder of the day. I was a little bit busy, so I did catch some of this trade. I didn't catch all of it. I wish to goodness that I could have, but this trade ran from, let's just say, about 47.610ish once it got out of there, and it ran all the way up to a high of 48.079. So that was a major move today. I wish I could have been in and caught the whole entire move. I did catch some pieces of it, but that's why I like this tool, because it's giving you the direction that the market is in alignment. Okay, and that's what we want to see as future traders, that we see NQ, we see RTY, we see YM all moving together. Now, at some parts of the day, you're going to see it didn't have any alignment, and then that's when you see it's kind of trading off sideways. When it got back in alignment, we start seeing better moves up, right? We see our pullbacks because price doesn't go straight up, it's going to retrace. When it got back into alignment, we seen our push up, right? A little sideways, our back into alignment, our push up, a little sideways, back into alignment, push up, kind of chopped up a little bit, manipulated up, back into alignment, pushed up, and the continuation of pushing up when you see price in alignment. So if you're seeing price continuously make higher highs and higher lows, and it's going in and out of alignment, when you find that price is continuing back into alignment, those are your opportunities to get back in, right? Or if you're seeing price is in alignments and maybe you didn't catch this move coming up, but the fair value, well, actually it wasn't a fair value gap right there, my apologies. So if you do see where price was out of alignment here, right, a fair value gap was created, right, then it fell out of alignment, dipped back down into the fair value gap and started pushing up, that's another entry for you, right? Or if you didn't take this one, take the continuation after it did push back into alignment, it broke that high, displaced slightly, created another fair value gap and took right back off. So it will give you multiple entries on directional moves, and it'll do the same thing vice versa if we were in puts, or, you know what I'm saying, if we were in shorts or whether we were in longs. Okay, so this is a great tool to have it assist you as far as directional moves and seeing what the market is actually doing. When we're out of alignment, okay, are we still pushing up to create higher highs? Or vice versa, if it was selling off, okay, are we still making lower highs and higher lows, but even with the pullbacks, it's still continuing to drop, because you'll see the same thing as you're seeing in this bull market right here today. Okay, I will try to go back and see if I can find a day maybe where it was having a little bit of a sell-off, to also give you that perspective as well. I don't believe this was a good day for that, but let's just see if we can find one where price did sell off a little bit. Okay, this is not one of the best examples right here, But like I said, the same thing where as soon as the market, as soon as the market actually opened up, we're starting to see that the market was selling off. This would be the New York sessions high right here. And as the price started to sell off, created a fair value gap, dipped down, higher lows, lower lows, right? And price keeps pushing down. It broke the 30-minute oil right here, fell back into alignment. And you, at this point in time, you would have been seeing, in fact, I'll do the replay mode just so you can see it right here, that in replay mode, what do we see? We see NQ is bearish, RTY is bearish, YM is bearish, and the VIX is rising. So it will be highlighted in red, but the thing is that you want to see the VIX rising while everything else is red. So throughout this whole period of time, that's what we'll see if we rewind it bar by bar by bar by bar. Now here, right, we would have seen it turn the opposite because we see the little green highlight back here. But from this point right here all the way down, pretty much besides the spots where it fell out of alignment, we would have noticed that that all three were bearish and that the VIX was rising as well. Now, I understand for some people that they may be like, okay, well, why didn't you put ES on here? Typically because ES is pretty much doing the same thing the NQ does. So even if we turned our chart over to ES, we will still see on that same day that it was still doing the same thing. Everything was bearish, VIX was rising, and ES was steady, still dropping, pretty much doing the same thing. We have the same pullbacks, we have the same out of alignments as we did with NQ. So that's the only reason why I didn't put ES on there, because you can still utilize this for ES as well. Okay, so don't think just because I didn't add ES on here that you still can't trade ES. That's pretty much the good breakdown of this indicator. What I am going to do is also I'm going to skip over, because I did also create this for gold for anybody who wants to trade gold. I have not checked it out necessarily on the ETF version. If you did want to trade the ETF version of this, but I still believe you will be able to. I will try to go over there for you guys briefly to take a peek and just let you guys kind of see what that is looking like as well. So let's actually, let me add the fair value gaps on here right quick for gold. And come on. Okay, sorry about that. Sometimes this Apple computer acts a little bit crazy, and it makes me have to go back and do a couple things to get everything together, unfortunately. So my apologies. Okay, and I always have my fair value gap set to 300, so that way we can see the ones that were back in case they get tapped into again. So now for gold, okay, let's make sure that we are out of replay. Oh yeah, we are out of replay mode. I believe. Sorry about that. So with gold, because you can also utilize this for gold, as I was telling you guys. So with gold, you are going to see a lot of more times with gold, you want to see them hit either your liquidity sweep areas, or you're going to want to see them have some type of rejections, whether it's off of the London high, New York high, Asian high, whatsoever, right? Because it does move a little bit different. So originally in the script, it is going to show that when gold is rising, that it's going to show red, because that is honestly risk off for gold, okay? Because gold is going against the dollar. So when it's risk off, it's going to be in red, and when it's risk on, gold will be dropping down. It's going to show it in highlighted in green. All you have to do, if it makes it easier for you, which it makes a ton of more sense, that's just how it's honestly built. You can just go into settings, and once you go into the settings, all you're doing is just going and you're just changing this around right here. You'll be changing the top one to red, and you will change the bottom one to green, and then that'll give you the colors as far as when gold is pushing up, you will see green like you normally would, because that just makes more sense. And when it's red, it's going down. So just go in there and change that onto the settings. But like I said, you pretty much want to see that some type of liquidity gets swept with gold, and then it starts to push up. And always gold should be bullish, and then the dollar should be bearish in order for it to continue up. Same explanation and breakdown that I gave you guys when gold is running, that if you see it falling out of alignment briefly, you have your pullbacks, then wait for it to pull back into alignment, and you can take the moves as it is breaking the highs of the previous candles, or in situations where you are finding that price is creating these strong bullish candles and then continuing up once they fall back into alignment. But I said the same thing as it's creating higher highs, higher lows. Those are the things that you want to primarily see with gold. If you do the orb strategy, pretty much the same thing as you'll see right here. So the orb for gold actually does open up at 8:30, so you will have an orb at 9 o'clock. Okay, so once you have your 30-minute orb, and then you see it breaks through, has this pullback, falls back into alignment, and pushes down, then those will be your same entries for gold as I explained to you on NQ, RTY, ES, or YM. Okay, see, we had our sweep down here, price wicked off, created the New York low right there, then it started to push back up a little bit, waiting for it to fall back into alignment, break these highs, bounce off of the 30-minute orb, push back down, fall back into alignment, and start pushing back up, creating fair value gaps, and dipping back down into it and pushing off until we break the orb, and then continue up for either the remainder of the day or portions of the day. So you can utilize this, like I said, on different time frames. If we want to go to a higher time frame on the 30-minute, then you'll see the same thing. Pretty much depends on how you like to trade. Right here, same thing on this day, was this Monday, November 10th, in alignment, fell out of alignment, dipped into this fair value gap that would have been right here, got mitigated at some point. I'll just rewind it just for you guys for visual purposes. So it did get mitigated right here on this candle right here. The fair value gap would have been here, opened up, went through it, pushed back up. Once price fell back into alignment, if you wanted to get in here, have your stop loss set, or if you wanted to wait till the next candle till it broke this high, then that would have been a great entry as volume kicked in, as we see down here in the bottom. It broke the orb, displaced, okay, came back, wicked off the fair value gap, and then kind of pushed up for the remainder. This was actually after hours right here. So once price opened up back at 6, it was still on the push up, pushing up. So price action tool, I would say a trend tool as well, let you know when price is trending, even when it comes out of alignment, right? But it's still trending up. So it's a good tool to find trends and also have other confluences set as well. I hope you guys found this video useful. If you are in either one of the Discords that will have access to this group, if you have any questions, DM me, or you can ask questions at the bottom of this video, and I will try to get back to you as soon as possible. Like I said, I hope you guys enjoyed this. I hope you have a great evening. Thank you.